Good morning, everyone. Welcome to another session of Forex Daily Analysis. We're about to kick off the week. So, with that, let's figure out what's happening this week. Last week was interesting. We started out well, and then the market ended up shifting, and the whole perspective changed. So let's just kick off with the dollar on this morning and just kind of get a grasp of where we are with our bias, right? So from last week, was expecting the dollar to potentially make a bounce off this level. It didn't do that, it blasted right down, and now we are just basically trying to see where will the market take off again. And currently it's still looking very bearish at this moment. If you can see, this is more of a continuation correction, and what this means is that even though our predetermined channel lines are around this area, it means that the market is not yet ready to accept that it's at its point where it can be an interesting area for investors to start buying. So it's currently still in a downfall. If you can see, we had an impulse, and then we had a correction, and now potentially another impulse to the downside. So with that being said, if you wanted to get in a couple of USD trades, USD pair trades like Euro USD, etc., based on this bias, you could definitely be bullish Euro USD, etc., although it's such a short distance that it's not really interesting for us to get in. So let's just jump to the bias on Euro USD. So Euro USD from last week, I was expecting it to kind of form the third to fourth swing point. Unfortunately, that did not happen, and instead we pushed higher, but the idea is still there. And when I say idea, I mean the idea of the third to fourth swing point. So if you can see, this is one to the second swing point, second to the third swing point, and potentially looking for the third to the fourth swing point. So let's see if this week gives us that confirmation that we have been waiting for. US 30 was a monster of a trade. My analysis previously, I predetermined that this was an inverse head and shoulder right here. I managed to get some nice profits on this double shoulder. Price broke above now the neckline, and our bias is to the upside, right? Remember I said last week we were waiting to retest this area, although US 30 is not really acting normal, as you can see. When it initially broke out of this inverse head and shoulder neckline, it's just been all bulls, so all green, and here as well all green. So there's not really much profit taking here in terms of buyers selling off their positions, etc. My bias for this week for US 30 would be to wait for some type of larger time frame correction. And the reason why I believe this correction will be very big is because of this move. So if you can see, this is quite a long or rather strong impulse, and it has not been corrected as yet. And because it's so long or strong, we can at least expect about price to correct down at least to about 50 or 70% of the impulse. So we'll wait for that correction so that we can get in long again on US 30. GJ from last week, if you recall, I said that price hit this daily key resistance level right here, and then it started correcting, although it did not form the fourth swing point. If you recall from last week, I said that I won't really be interested in going long on GJ, and the reason for that was because we're very close to the key daily resistance. So as we can see here on GJ now, it has kind of started to form the fourth swing point. As you can see, we had 3, to potentially fourth swing point, right? So if GJ presents us with some sort of like reversal pattern on the lower time frames in this uptrend channel, then we will definitely be looking to go long on GJ up until this key resistance and potentially break above this key resistance, as last week we did not have enough to break above. But if you can see on GJ, my bias is still very bullish. As you note that whenever the price went up, we hardly had any bear candles in that. And here again, the price went up and we hardly had any bear candles. And if you remember from last week, I said that GJ on bears won't be really good to take, because every time the price went down, there was a multitude of, or rather a mixture of red and green candles. As you can see, even here, it struggled to go down, and now it finally went down. So let's wait for this foot swing point to form. Potentially here, this is probably previous demand zone based on this bullish candle. So let's just wait and see. Probably at the end of today or around London to New York session changeover, we could have a trade-off and potentially get in long. It's also noted to note that we could have a potential manipulation area in the zone. What that means is that price will give a fake out to the downside, trapping sellers into thinking that the price is selling off and they enter sell positions, and then just shoot all the way up and take them out to create the volume to the upside, right? Okay, USD JPY. I noted from last week that we formed some sort of wedge formation on a larger time frame. As you can see, that price is kind of in a larger time frame correction after this impulse to the downside, and now we are just basically forming a sort of wedge formation. If you recall, I always speak about the reverse wedge. This is now the proper wedge. So it's very possible for price to either break to the downside and retest this key daily support structure, or for price to just conform to this conform to the pattern and then hit this area and continue to the upside. Right? Okay, gold. If you remember from last week, I said that gold was selling, and gold did end up selling. Gold, if you look at this, we had impulse to the downside correction, impulse to the downside, potentially another correction, although it won't really be obvious at this point because we are at the 90% of this previous channel. If you know the 90% rule, whenever price breaks out of an ascending wedge or bullish descending channel, it gets to about 90% before it reverses. And if you can see, this is around maybe 50% and we still broke lower. Now we're at the 90% of the channel, and you can see that price is giving a strong bullish impulse to the upside. So let's just see if we can't form some sort of correction structure perhaps to continue to the downside, or we'll just wait and see how price responds at certain levels. But definitely for me, I believe that gold is still very bearish, as we are potentially in the third to fourth swing point. 1 to 2, 2 to 3, and potentially 3 to 4. So it's very likely that gold will continue to the downside. We just need to build up the volume to get past this level. Okay, so that's all from me. So yeah, based on what the dollar does during this week will give us bias for our trades. For now, it still can be potentially a little bit more bearish to the downside, so I won't really be interested in getting in any trades. I will be interested though if it can give some sort of reversal pattern at the zone, which then I will be looking to short Euro USD, long USD JPY, and gold will be looking to short gold.